Seems like we're asking the very same questions we were asking before I actually left. And that is this as good as it gets? Is the economy peaking? Are stocks overvalued? What's going on with the taper? Here we find ourselves. I'm back, and I'm thinking all those things. And remember, you were Mr. All-In before I left. I at least thought about you maybe once while I was gone, wondering that very question. Are you still Mr. All-In, Jim Lebenthal, or are you wavering?
I am still all in. I am not wavering. Had to get that out first. Welcome back, Scott. We missed you. Listen, it's interesting, though. It's like you never left, right? We're having the same discussion, as you pointed out, the same sort of risks that we're talking about. I guess we're going to have the discussion about whether a correction is due. You know I hate that, but I'm all in. And let me try to simplify this a little bit. You know, you brought up the taper. Let's say the Fed tapers in November. Let's say they go 10 months before they complete the taper. That means for the next year plus, you're still going to have the Fed putting liquidity into the system, albeit at lower amounts, but you're still going to have the Fed putting liquidity into the system. That cash is going to have to find a home. You think it's going to go to T-bills? I don't. I think it's going to go into the stock market. And so, you know, we're 1% on the S&P 500 from the all-time high, which we just set last week. Maybe we go down 3, 4, 5%, but as has been the case the last year, I think that's going to be it before buy the dip comes in. And in the meantime, one other point I want to make, excuse me.
Go ahead.
FANG has been crushing it the last few weeks. You know what hasn't been crushing it? Reopening / cyclical / value. That's where the opportunity lies. If you believe that with 75% of U.S. adults having gotten at least one shot, that we might be coming close to the peak of the Delta surge, as Dr. Gottlieb has said, this month will peak. That would tell us that the reopening / cyclical trade is where you want to start pivoting now.
Okay. So, Jenny, you heard it there. There's a lot of uncertainty, it feels like. I mean, there was before. There appears to be now. Jim Lebenthal basically says, don't worry about it. It's all good. Things are going to be good. Delta's peaking. We're going to get beyond Delta. We're going to get back feeling better about the economy, the recovery. We're going to spend our money. Stock market's going to go up because there's nowhere else to put your money. Rates are still low. Liquidity's still flowing. What's the big deal? You agree?
I agree in the long term. And this is all about what I always come back to, which is what's your time period? So if you are a short-term trading-oriented person, you may be pretty cautious right now. What I think is interesting is we have strategists coming out who are pretty bullish right now, strategists who are, you know, a little cautious, and the bullish ones are only looking at one side and the bearish ones are only looking at one side, but you match them up, and I don't think it's a pretty picture. So I think on balance, I'm actually skewing towards a bit more caution and a bit more negativity.
Wow.
But because I'm a long-term investor like,
wow.
Right, but here's the thing.
Wait a minute.
Because I'm a long-term investor like Jim. Mm-hmm.
I know, but before I left, you were like glass half full. You had the most big picture, one of the more optimistic views about where we are. Now I feel like you're wavering a little bit on where we might be in the market.
Not in the long term. In the short term, okay, fair enough. In the short term, no. In the short term, you're right, though. I came back. I've been gone for the last 2 weeks, too, on vacation. It was really great. And I love those times. It gives you time to contemplate. But I came back, and I'm looking at the list of pros and cons. And the cons are seasonal headwinds. September's always weak. Massive stock issuance coming up. Central bank tapering. U.S. tax hikes potentially. Maybe some fears over the debt ceiling. Earnings headwinds potentially, because we're probably not going to match all that strength. Those are real negatives. The positives are, Jim's right. The Fed will continue to pump money in. We don't know at what pace. Earnings are resilient, but valuations are stretched. And I just see, when I look at that balance, I think there's more strength in the negatives than there is in the positives. I don't think we're up for a major correction, maybe a pullback. But then I say, I'm all in too. You know, I'm fully invested, just like Jim, because I'm long term. And I think that when you say, is it as good as it gets? It may not be great in the short term, but is it as good as it gets? It's never as good as it gets in the long term. In the long term, the market always marches steadily onward and upward. So it's never as good as it gets. In the long term, it's always getting better from here.
Okay.
Just might be a bumpy ride.
It's hard to argue with that, Joe, right? I mean, I think most of our viewers are taking a longer-term view. They think that their money's going to grow fairly well over time. We certainly hope it does. In the near term, though, I don't know. It all depends on where you think we are and where we're going in the more near term. Deutsche Bank today says they're expecting a significant pullback before equities rally once again. Quote, with signs that indicators of macro-cyclical growth are peaking, we look for a significant consolidation / pullback in equity markets, S&P minus 6% to 10%. Bank of America's Savita Subramanian, she goes a step further. Mark to market, our S&P 500 2021 target is raised, she says, to 4,250. Joe, do you know where we are in the S&P right now? We're at 4,500.
I do.
So she raises to 4,250. The problem is we're at 4,500, so that's not good. And she says, and I quote, "This may not end now, but when it ends, it could end badly. If taper means no upside to the S&P 500, tightening would be worse." Who's right? Who's wrong? Who's got this right?
All right, so let's break that down, and welcome back, Scott. Good to see you. In the near term, and Jenny's going to love this one, but understand there's competition for equities this week for the very first time. You have 38 deals in the investment grade and high yield market. In addition to that, you have $120 billion worth of government debt that's being offered. So there's competition here in the near term. Beyond that, I disagree with Jimmy. I think the roaring 20s narrative that cyclically oriented stocks, whether it's airlines, casinos, or hotels, that's kind of been priced out of the market over the last couple of months. And I think it's going to be continued to be priced out. I think where the money has gravitated towards is the FANGs in a very defensive nature. And I think, Scott, yes, a 5% pullback, we all know that garden variety correction could come at any time. But if you want to give me a double percentage decline in the market, you have to tell me that the FANGs are going to break down, just as they did in 2018. 2018, you lost Netflix in June. In July, you had Facebook go down 20%. 2 days later in July, you lost Alphabet. By the time you got to September, all you had left was Amazon and Apple. This time around in 2021, you have strength in the FANGs. Maybe you could make an argument with the 7% decline in Amazon in July. That's the beginning of something. But there's still enough of the FANGs near their all-time highs that I think that buffers any potential double-digit decline.
I can't argue with that.